Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. After 4 steady upward days, the market is now finding resistance close to 71 cents. A point that I made, there could be a bull trap above here, and therefore from the retreat there could be further to the downside this week. And that is down towards the region of 69.5 to around 69 cents, given that the fact we've already seen the move up, the hesitation of a move beyond 71 and a potential bull trap. So therefore, let's see if the market does shed some of its gains and look back towards our bottom side of the range. Friday's US CPI came in broadly as expected, but remained firm with monthly inflation jumping 0.9% and the annual rate rising to 3.3%, driven by energy, though the data failed to generate sustained US dollar strength. Elsewhere, geopolitical tension around the Middle East still continues as uncertainty in the US-Iran talks, which weighed on the greenback, keeping the Aussie slightly supported, as we can see here, as the market has rebounded from the lows of 70 cents to 70.5 in the last few hours. Given the fact, as I say, the technicals are overall breaking down, I'm not a bull for the start of this week. As we can see, the euro is still keeping relatively bullish candles as the market marches higher, but still finding a little bit of hesitation towards this topside area close to 117.5. Given the fact that the market may actually reverse, I am looking back towards this break level that's seen around 115.65.75 and reassess. With much talk of a shoulder, head and shoulder, the neckline is coming in roughly around 158.45. From the head to the neckline, a break of the neckline gives us a measured move down to 156, which is what I'm actually calling, and any moves beyond 160 does give fear of a bull trap. So let's see how the market plays out into this week. Looking at sterling, well, another rejection from that top side area close to 135 and putting a little bit of weight on the downside. Could see some further losses into this week and looking down towards the region of 133 and reassess. When it comes to commodities, I'm still neutral due to the fact that the market is just too much noise in the whipsaw price action that we are seeing. The technicals are breaking down here, given that that gravestone doji may have put a little bit of weight. But like I say, I'm neutral, no real outlook in terms of bullish bearishness, but let's see if the market does weigh on the support to the start of this week. A jump and a gap, you can see here for oil, jumping over 5%, and now expecting to see this gap being filled. But like the way the market has been playing out, I still feel there is way too much risk to come out with any calls to direction, so I sit neutral as well to this market. Well, that's a wrap. Thank you for joining me. And as always, look out for the interest rate report. I hope you enjoy the great start to the new week.